Hello everyone, welcome to my channel. Today I'm going to talk about tax time has arrived, tips for getting ready for your tax appointment. Let's get into the video. You, like most taxpayers, probably dread the task of pulling together your records to prepare for your tax preparation appointment. But the effort usually pays off in the extra tax you might save. When you arrive at your appointment fully prepared, you will have more time to consider every possible legal deduction, evaluate which income reporting and deductions are best suited for your situation, explore current law changes that affects your tax status, talk about tax planning alternatives that could reduce your future tax liability. Choosing your best alternatives, the tax law allows a variety of methods of handling income and deductions on your return. Choices when preparing your return often affect not only the current year but future returns as well. Topics these choices related to include sales of property, for the year in which you sell property and arrange the sale so that you receive payments on the sale contract over a period of years. You can sometimes choose between reporting the entire gain on the return for the sale year or over several years as you receive payments from the buyer. Next is depreciation. When you purchase certain property used for business, generally the cost is written off, depreciated over several years. But in some cases, the cost can be deducted all in one year. Where to begin? Preparation for your tax appointment should begin in January, right after the new year. Set up a safe storage location, such as a file drawer, cupboard, or safe. As you receive pertinent records such as the W-2 forms and 1099s reporting interest, dividends, or other income, file them right away before you forget or lose them. Make this a habit and you will find your job a lot easier on your appointment date. Other general suggestions to prepare for your appointment include segregation your records according to income and expense categories. File medical expenses receipt in one envelope or folder. Mortgage interest payments, records in another. Charitable donations in a third, etc. If you receive an organizer or questionnaire to complete before your appointment, fill out every section that applies to you. Important, read all explanations and follow instructions carefully. By design, organizers remind you of transactions you may otherwise miss. Call attention to any foreign bank account, foreign financial account, or foreign trust in which you have an ownership interest, signature authority, or controlling stake. We also need to know about foreign inheritance and ownership of foreign assets. In short, bring any foreign financial dealings to our attention so we know if you have any special reporting requirements. The penalties for not making and submitting required reports can be severe. If you acquired your health insurance through a government marketplace, you will receive Form 1095A issued by the marketplace that will include information needed to complete your return. Keep your annual income statement separate from your other documents. Example, W-2 from employers, 1099 from bank, stockbrokers, etc., and K-1 from partnerships, S corporations, and trusts. Be sure to take these documents to your appointment including the instructions for K1s. Write down questions so you do not forget to ask them at the appointment. Review last year's return. Compare your income on the return to your income in the current year. A dividend from ABC stock on your prior year return may remind you that you sold ABC this year and need to report the sale, or that you haven't yet received the current year's 1099 DIV form. Make sure you have social security numbers for all your dependents. The IRS checks this carefully and can deny deductions and credits for returns filed without them. Compare deductions from last year with your records for this year. Did you forget anything? Collect any other documents and financial papers that you are puzzled about. Prepare to bring these to your appointment so you can ask about them. Accuracy even for details. To ensure the greatest accuracy possible in all detail on your return, make sure you review personal data, check names, addresses, social security numbers, and occupations on last year's return. Note any changes for this year. Although your telephone numbers and email address aren't required on your return, they are always helpful should questions occur during return preparation. Marital status change. If your marital status changed during the year, if you lived apart from your spouse, or if your spouse died during the year, list dates and details. Bring copies of premarital legal separation, divorce, or property settlement agreements, if any, to your appointment. If your spouse passed away during the year, you should have a copy of his or her trust agreement or will available for review. Dependents. If you have qualifying dependents, you will need to provide the following for each. If you previously provided your tax preparer with items 1 through 3 I just spoke about, you will not need to supply them again. First name and last name, social security number, birth date, number of months living in your home. The fifth thing is their income amount, both taxable and non-taxable. If your dependent is your child over age 18, not how long the child was a full-time student during the year. For anyone other than your child to qualify as your dependent, they must pass 5 strict dependency tests. If you think one or more other individuals qualify as your dependents, but you ain't sure, tally the amounts you provided towards their support versus the amounts they and others provided. This will simplify a final decision. Some transactions deserve special treatments. Certain transactions require special treatments on your tax return. It's a good idea to invest a little extra preparation effort when you have had the following transactions: sale of stock or other property. All sale of stock, bonds, securities, real estate, and any other property need to be reported on your return, even if you have no profit or loss. It's in most cases, brokers will provide a detailed list of transactions for the year, along with the Form 1099 INT and 1099 DIV they issue. If this sale isn't included on the broker report, list each sale and have purchase and sale documents available for each transaction. The purchase date, sale date, cost, and selling price must all be noted on your return. Make sure this information is contained on the documents you bring to your appointment. Do not forget to include information and documentation about digital asset transactions, including non-fungible tokens, NFTs, and virtual currencies such as cryptocurrencies and stablecoins. This includes not a complete list. If you receive digital assets as payments for property you sold or services you provided, receive digital assets because of a reward or award, and sold or exchanged digital assets for other digital assets. Gifted or inherited property. If you sell property that was given to you, you need to determine when and for how much the original owner purchased it. If you sell property you inherit, you need to know the original owner's death date and the property's value at that time. You may be able to find this on estate tax returns or in probate documents. Otherwise, as the executor, reinvested dividends. You may have sold stocks or a mutual fund in which you participated in a dividend reinvestment program. If the company or fund hasn't tracked this information and provided the details to you, then you will need to have records of each stock purchase made with the invested dividends. Sale of home. The tax law provides special breaks or home sale gains, and you may be able to exclude up to 500,000 on the gain from your primary home if you file a married filing jointly return and meet certain ownership, occupancy, and holding period requirements. The maximum exclusion is 250,000 for others. Since the cost of improvement made on your home can also be used to reduce any gain, it is a good practice to keep a record of them. The exclusion of gain applies only to a primary residence. So keeping a record of improvement to other property, such as your second home, is important. Be sure to bring a copy of the sale documents, usually the closing escrow statement. Purchase of a home. Be sure to bring a copy of the final closing escrow statement if you purchase a home. Vehicle purchase. If you purchase a new or used plug-in electric car or fuel cell car or cars this year, you may be qualified for a special credit. Please bring to the appointment the purchase statement and the paper copy of the seller's report that the dealer was required to give you. If you transfer the credit to the dealer at the time you purchase the vehicle, you are required to report and reconcile the transaction on your return for the purchase year. Home energy related expenditures. If you installed a solar electric system on your home or second home or made other energy saving improvements on your home to your home, please bring the details of the purchase and the manufacturer's credit qualification certification to your appointment. You may qualify for substantial energy related tax credit. Identity theft. Identity theft is rampant and can impact your tax filing. If you have reasons to believe that your identity has been stolen, please contact your firm as soon as possible. The IRS provides special procedures for filing if you have had your identity stolen. Car expenses. Where you have used one or more automobiles for business, list all the expenses of each separately. When claiming a tax deduction for business use of your vehicle, the government requires your total mileage, business mileage, and commuting miles for each business use of your car to be reported on your return. So be prepared to have those numbers available. If you were reimbursed for mileage through an employer, known Know the reimbursement amounts and whether it is included in your W-2. Charitable donations. You must substantiate cash contributions regardless of amount with bank records or written communication from the charity showing the name of the charitable organization, date and amount. Unreceipted cash donations put into a Christmas kettle, church collections plate, etc., are not deductible. For clothing and household contributions, items donated must generally be in good or better condition, and items such as undergarments and socks are not deductible. You must keep a record of each item contributed that indicates the name and address of the charity, date and location of the contribution, and a reasonable description of the property. Contributions valued under $250 and dropped at an unattended location do not require a receipt. For contributions above 500, the record must also include when and how the property was acquired and your cost basis in the property. For contributions above 5,000 and other types of contributions. Thanks for watching this video and do not forget to subscribe to my channel.